let's go now to our friend Bimnet Abibi from Galaxy Trading, as always. Bimnet, welcome back to Galaxy Brands.
Thanks for having me.
I think this might be the first one live back in the office that we've actually sat. Maybe it was like two weeks ago. I think we might have done one but I've been traveling. And my gosh, I get back to the office and we have just an absolute shock of a market week this week.
Yeah, absolutely.
I am, of course, referring to the launch of DeepSeek AI, this Chinese-based LLM model.
Yeah.
That is apparently an order of magnitude more efficient than previous models or something like that. Massive market shakeup on Monday.
Yeah.
Equity markets off huge, big name like AI stocks down huge. It's sort of settled now. What was your takeaway from that?
Yeah, no, I mean, I think it highlighted kind of just how much exuberance there was in AI. Going back to, the DeepSeek claims that were really notable was, they claimed to have done it with about $5 million in spend.
Dollars.
Versus like all the companies in the US that are spending tens of billions of dollars. And so, the market really grew concerned about, compute and how much compute was actually needed to get to kind of the ultimate stage of
whatever
of
the promised
AI.
land is for
exactly.
AI. Yeah.
And so, those concerns, trickled into the market at very stretched valuations, and it basically forced folks to reassess. And I would also say the magnitude of positioning, in AI names, AI services, power, et cetera, was it's pretty close to like a 10 out of 10. Let's put it that way.
Everyone
was long.
Yeah.
Just to give you an idea, we spoke about it, on last week's podcast, like the power basket and nuclear stocks were up like, over 10 to 20%. Nuclear was up 20% to start the year.
Yeah.
Right. And so, and these companies are like pre-revenue, like it's all based on, the forward expectations of power consumption. The high level story is basically power needs have grown like next to nothing over the past like couple of decades. And they're expected to grow at like 10 to 20 to potentially even 30%. And that was what was baked into the stocks. And so now if you actually need a lot less compute, that means you need a lot less power. And so a lot of names that were associated with this AI infrastructure took a hit.
Yeah.
And there's also just kind of the dynamics that are at play in the market now, which is like, you have all these levered ETFs, the options positioning, et cetera. And so, these moves tend to get exacerbated. So that's a little bit more technical rather than fundamental. But you got kind of that sweet setup where, positioning was stretched and the fundamentals changed. And then the technicals took over. So you had a pretty big correction. NASDAQ overnight dropped as much as 5% before rebounding. And that obviously trickled into other risk assets like Bitcoin. So yeah, it was a pretty big deal.
Yeah.
For this one segment of the economy and markets. I would say though that kind of the broader structural things separate from AI are still intact. Like DJT is still going to deregulate like crazy. The Fed is probably not going to be hawkish or that hawkish on a go forward basis. And U.S. exceptionalism in all things is still prevalent.
Right.
And so that's why you saw, even on that down day, like I'm pretty sure
It's like record inflows, like dip buying and stuff too.
300 of the 500 names in the S&P were actually up.
Yeah.
Right. And so even though the index was down, right, like you had the rest of the companies actually do okay. But the issue now is, going back to some of the technical aspects, is, these Magnificent Seven names contribute so much of a percentage of the overall index that when those names drop, that basically means the index has to drop.
Yeah.
Right.
For
and
sure.
so, there's a lot of things at play, and I think the market's still kind of digesting, what the forward looks like, and cooler heads are now prevailing, and I think you'll see that reinforced today with Meta reporting earnings and Microsoft as well. I think folks will be very eager to kind of see what those CEOs say about their expected R&D budgets for this year.
Right.
I think most likely
You think
they
you're
will
going to hear the word Jevons paradox? The phrase?
maybe, but most likely they will reiterate that they're still going to spend.
Yeah.
And there's also a decent argument to be made that if your basically demand's going to get pulled forward because it means that you can get to the end state of AI, general intelligence, et cetera, sooner.
Yeah, I mean
right?
that's
so
that's
you
one of the questions.
and like it's one of those things that it could be a winner take all kind of market, and so you want to invest more aggressively, arguably.
It's interesting, because the one of the sort of humors of watching the market reaction, which makes a lot of sense given the valuations of a lot of those companies and the expectations of spending and how much they would need from power, and obviously the picks and shovels around them. But one of the arguments is like, wait a second, you're telling me that like it could be much more efficient and we could go faster. Isn't that good for everyone, including those big names? The other thing, it also assumes that there's some end state, that there is actually like, oh, you get to like AGI and now like you stop buying chips, building data centers, and most people don't believe that. So like it's actually like, isn't it just the same thing? I think it's one of the things that it highlighted for me though was, especially in an economy and a world so driven by technology innovation, and which is likely to continue probably forever to be driven by that, the chance, the likelihood even of black swan tech innovation impact on the market, right? Because I think on a long enough time frame, we're likely to get step function innovations for all of history, right? So like the idea that something can be invented or discovered from a technology standpoint is something that markets just constantly have to think about, even probably more so. Quantum comes to mind as well. If somebody has a breakthrough in quantum.
I think what this whole episode really underscored to me was that the variability about future outcomes is really like way greater than people actually think. And so you have to price in like a pretty substantial level of uncertainty. Right. And right now, markets, before this event, markets were priced to perfection, right? As if we kind of knew more about these unknown variables than we actually did. And so I think it really forces people to do their homework and kind of be a little bit more humble about kind of the state of what the state of the world is going to look like 5 years out, 10 years out, et cetera. And that should mean, in theory, I think that means lower valuations. In practice, I'm not so sure as to how the markets develop. Obviously, there are other things that move the market, and so I sit here, relatively humbled by the occurrences of the weekend. But in theory, it's like like you had a market that was totally offsides, and when there's irrational exuberance, you tend to see like multiple sigma events happen. Right. And on a go forward basis, like you were saying, like it's totally possible, right? Like, one of the companies that like the moment like ChatGPT came out, there's a ton of names that just nuked.
Right.
Because it was like,
there was customer service companies and like things that did like anything kind of like internet customer service support, let alone like developers. And
absolutely. And I think that's really kind of what I'm harping on right now is like clearly AI is moving faster than we expected, right? And what does that mean for like the real world in terms of like jobs, for example, and how soon jobs are likely to go away? Everything from lawyers to customer service people to
even like diagnosing doctors.
Like you put the whole genome and analyze it and
look at the picture of the X-ray. It starts to get
all of the above. And so I think the pace of that evolution is one, the pace is dynamic as well.
That's true. It goes in fits and starts, it seems. But it does, I agree with you though, it does feel faster than expected. Like even in 2019 or 2020, like data centers weren't that good of a business.
Yeah.
Right? The people weren't investing them. I mean, there's some big hyperscalers that were small companies then. And so it's like, and now it feels like it's going to be 1,000 times bigger than it is now, right? Like, it's like, it does feel like we've gotten a lot faster. Even like, remember there was the, one of the sort of early like joke tests on the internet for how good AI was if it could make that video of Will Smith eating spaghetti. Do you remember?
No,
and it was really, really bad, like just like 3 or 4 years ago.
And now
he sort of like, it was all janky and the spaghetti's flying, and now it's like really good in just a couple years. And now you see all these. I mean, now there's just people making memes that look real that are good, right? I mean, it's like it's not just like in some laboratory either. It's frankly like pretty widely accessible already.
Yeah.
And that's crazy. If you told me a couple years ago,
Which makes me think like the productivity growth in the U.S. is really and globally is going to pick up a ton.
yeah, yeah,
Um,
that's maybe an optimistic thing. It's like not that necessarily every job goes away. I actually did an episode with our friend Nick Carter like 6 months ago, who was a big investor in a major hyperscaler, and I think we titled the the episode was called like "Every Job is Going Away Because of AI" or something. But maybe it's also, hopefully, it's also productivity gains for the existing jobs, and that we grow our
Yes.
GDP, and that it's not right. Yeah,
but ultimately, like you're headed to a lot less employment. I'm pretty sure.
and by the
And
way,
that
that's what
might-
Altman and a
Yeah.
lot of these people are saying and worried about, right? That's why Sam Altman, as an example, has been calling for like a UBI in response
You
to
have
this
to
forever.
go to UBI. Like we need to start talking about it now, and like
Oh man.
it's coming.
All right, before we go, we could talk on and on about this, but let's talk a little bit. We're usually we wait to record this episode after Jay Powell comes out and gives comments following the FOMC meeting. For scheduling reasons, we're recording this a couple hours before then. But what is you said before? We expect the Fed to mostly be cutting over time or mostly dovish. Do we expect anything? I think markets are pricing in basically zero cut at all today.
Correct.
So just flat, like a
cautious
pause.
To use a sports analogy, I think Powell is going to throw a fastball right down the middle today. There are going to be basically no shocks to the market. In terms of just like one market's anecdote to think about, the implied move on Treasury futures is the lowest it's been in 3 years.
Yeah.
For an FOMC event.
Expecting basically no volatility.
Well,
or the smallest amount in
Correct.
3 years. Yeah.
Correct.
Yeah.
And it might even realize less than
Right.
implied.
Right.
And so like that's kind of where the market is at. In terms of the data we've had since last FOMC, the job data has been a bit stronger. The inflation stuff has been relatively tame. And so, on the data front, not much has really changed to impact the Fed's messaging. In terms of Trump policies, they've been slowly rolled out over the past couple of weeks. Or I guess he's only been president for a week.
Feels longer already, but yes, a lot of news.
Lot of news, but again, it's still tough to forecast out the implications of what he's doing.
Stuff's still just barely getting
and
going.
the government moves slowly in like spending and tax policy.
I think Treasury Secretary now Bessent was only confirmed on Monday.
Correct.
So just literally getting into the office.
Yeah. So there's still a long ways away, and so given that level of uncertainty, the Fed is going to stick to their guns and say they're going to be data dependent, and that that a couple of cuts this year are probably still likely, and the market's probably not going to react much to it. And honestly, I think the market really doesn't care what Powell has to say right now. It's literally all about Meta and Microsoft today.
The big tech earnings.
Big tech earnings.
Yeah, and what they say about DeepSeek and AI spending.
Correct. Those are the only things that matter.
Okay, and then last question. During that pretty big wipeout, I think in absolute terms, it was one of the biggest drops in history.
Yeah,
on Monday,
$500 to $600 billion out of Nvidia, and
a lot of the we're sort of flat. Like the hysteria, at least from Monday, has subsided, but cryptos came down as well. Bitcoin, I think, traded in like the 98K range overnight that night, but again, it's at our block clock is currently needs to
right
be
around
reset
102
up.
here.
101, 102. It's basically holding. The rest of crypto not doing great, like not horrible. I mean, the big names mostly okay-ish, but the meme coins, it seems like the air has been sucked right out of the meme coin complex.
Yeah.
How do you think about Bitcoin and I don't know in the near medium term in general? I mean, it's mostly holding up here.
Yeah,
which is positive.
I think Bitcoin, like you just have to keep thinking about like how much money there is in the world, and are people bought into the 2% thesis or 1% portfolio thesis? And I think a ton of real money is bought into that thesis, and so you're still in a year where you're going to continue to see inflows from institutional types. You're going to see inflows from Saylor probably on an ongoing basis. And so I think the path is probably a little less bumpy than what we've had in the past, which shows maturity, but also shows, kind of the scale of Bitcoin now being worth $2 trillion, like it's much harder to move it up and down 10%.
Right.
Right. And so, I think Bitcoin, will continue to trade okay. I think 92K is strong support, right? And 108, 109 is a strong resistance. And, I think a break of either of those levels, we'll probably see continuation.
Yep.
And so, I think you kind of have to treat it as a range trade until it's not. That's kind of my view on Bitcoin. With the rest of the complex, I think, what really kind of set the tone for that complex is kind of the Trump token launch a couple weekends ago. And, you saw the price reaction when the token launched. Every token dumped, with the exception of like Bitcoin, basically.
Yeah, people were selling to go buy it, and then
Yeah.
it sucked the liquidity right out of it.
It's kind of one of those moments where you go from like having cognitive dissonance about like what alts are and what these tokens are and the valuations, to like being like, holy shit, this is just a
This guy
huge
he can launch one, and it can go to 80 billion FDV in 5
dump,
minutes.
and then dump after as
Yeah,
well.
right.
And it's just a meme, and like that reality is kind of setting in a ton. And the issue is, it's just like I don't know where I heard the stat, but I think there's something like 1 million new tokens launched a day or a week.
Yeah.
And so the amount of sheer supply in the market of memes
lot.
and tokens is a lot. The existing unlock schedules of tokens and the existing emissions is a ton. In terms of flow that we see here on the desk, like we get shopped a ton of paper at pretty meaningful discounts. And so, the market is awash with crypto token supply. And, this is kind of one of those things where, like, if you think about crypto, prior to this administration, it was all about future expectations of what the world will look like.
Regulatory changes, and yeah.
But
those are still coming.
Once you get those, though, it's like you got to prove that you can last.
Now it actually has to deliver.
Generate revenue.
Right.
And crypto's always been like, you always want to be pre-product. Like, it's
Yeah,
all
yeah.
about the hope. But
It's like
now
that,
it's like, show me.
Yeah. No, I mean, I think that's right.
And in a show me market where you still have a ton of tokens worth billions of dollars, it's like,
Right.
like it's time to put up or shut up in a lot of situations. And so, like there's a lot of folks, just thinking about that kind of
Now
construct.
you really have to deliver product and value now. It
Yeah,
can't
and
just be
so-
like, oh no, we tried to, but we had a government's boot on our neck. But now
Yeah.
if the pathway is lifted or made available to you, now it's like, well, all right, go build the thing you promised.
Yeah. And then you're also just having like an insane amount of like product launches now that the ETFs are more likely,
Tons.
etc. And some of these things, like there was a provider that was launching like a levered Melania token, and there's Litecoin ETFs, and a lot of stuff that is going to be a tough sell to like an institutional investor, for example. And so it's getting to a place that can be a little cringe at times, just speaking honestly.
Yeah.
And it makes people less inclined to put money to work in some of this stuff.
Yeah, I do think there's a reckoning that needs to come with where you separate the wheat from the chaff, right? And I would say the Bitcoin's relative performance and absolute performance really show
insanely impressive.
Very impressive. The
Very
market is
impressive.
looking at Bitcoin in particular, and some other big names generally, but Bitcoin the most notably as having value and holding it there.
Yeah, I mean,
not sure about all this other stuff. But
realistically, like you had the NASDAQ implode, and Bitcoin went from 105 to 98 and settled around above 100.
yeah,
Right. And so if you told me NVIDIA would be down 17% on a day, I'd tell you Bitcoin's down 10 at least.
at least maybe more,
Right.
maybe worse. You'd think it might be act like people say for a long time that it was effectively high beta tech. So should we actually be down or up more? I mean, so I agree. Very impressive.
And so I think you're just moving along the curve, right? Like I fundamentally still think Bitcoin's a risk asset, and if S&P's down 5, like nothing is safe.
Yeah.
But I think over time, what you're starting to see with like a broader institutional investor base is that the kind of shift to it being more of a store of value, monetary debasement hedge, et cetera. And so you're seeing Bitcoin's characteristics morph into kind of our, digital gold kind of narrative. And so I think that's partly why you're seeing the price action that you are. But it's also like this stuff is every day being put into portfolios that are not as fickle, right? Going from weak hands to strong hands, right? Like when Saylor buys Bitcoin, he's not selling it, right?
Yeah, and he's not buying alts with it.
He's
right?
not correct. And
ETF buyers or RIAs or wealth management firms, et cetera. Yeah.
right. And so like over time, that should mean that like it'll continue to kind of trickle upwards, and that's kind of the hope.
That's the thesis.
That is the
Yeah.
thesis. And the other thing that with this dynamic that changes things, and with the ETF in general, is that less money flows from Bitcoin to alts, right? When people feel like going out the risk curve.
That's right.
Right. And so
It
like
dampens the intra crypto cyclicality. Is how
Correct,
we
correct.
predicted this. You and I, we talked about this back in February and March.
yes. And so you'll see on a continued basis more dispersion between Bitcoin and kind of the rest of the assets in the space because, Bitcoin's finding its niche in a lot of great portfolios.
Right.
And so, it's really hard. I mean, just think about this, right? We've been making this argument for as long as I've been at this firm, but, Bitcoin fundamentally is an asset in a portfolio that not only improves your return profile, but also improves your risk-adjusted returns, right? It lowers the vol of your portfolio. And so how can any risk manager in the world in this current state of Bitcoin where it's super liquid, and tons of instruments, institutional acceptance, you got Larry Fink on TV about it. Like, how can you ignore something that when you stick it into a model portfolio spits out an output that you can't ignore? Like
You can't do it.
and so, as that argument continues to gain more traction, I think you'll just continue to see more institutional adoption.
All right, that was a great one. Great rip here, Bim. My friend Bim Netabibi from Galaxy Trading. Thank you.